Well, welcome everybody, and thanks for coming to the next in our next level webinar series. I'm Greg Skogsberg from TWH Annuities and Life, and today I'm going to introduce you to a person that has been instrumental in helping us provide better service to our advisors through some technology that he created that is just really cool. We have been with Kent almost since the beginning of this technology that we're going to show you today. The strategies that he's going to go over are ways that will help you set expectations with clients, which, trust me, if you don't already know, is the crucial part in closing a sale and then keeping a client. And then he's going to show you some ways to set informed allocations, because you get to that point in application when you have to select what crediting methods you're going to recommend that they put their $500,000 into, and they're going to be looking to you for informed expert decisions. And we can help you with this tool, and you can even log in and do it yourself so that you can give them data-driven decisions, and they're going to have so much more confidence in the $500,000 that they just put into an index annuity. And then once you get that client into an annuity, you've got to meet with them every year. At least you better, because they're going to get a letter a month before their anniversary date that shows them, honest to God, 30, if you're in some of these products, 30 different crediting methods, and what they did last year, what they are going to look like in the next year with the caps and the participation rates. And they are going to call you immediately because they can't make heads or tails out of that. And then you can easily and uh, using data rather than just hunches or, well, I think the economy might do, go back, and you can have a very powerful meeting with them that makes them strongly believe and reaffirm that they made the right decision, not only in being in the annuity, but in choosing you as their advisor. Why we use these tools and why we have our advisors use these tools is really simple. They turn opportunities into sales, or even unexpected opportunities, like you go to a client anniversary meeting, and because you're able to show them such informed data, they become so impressed, they refer more people to you, or they find new money they want to give you. This is part of how we became the #1 FMO, concierge FMO in the United States. We help agents with more sales, more income, and maybe most importantly, at least that's what they tell me, more free time, more commissions, and best in industry case designs. These tools that you're about to see help us with those case design decisions so that you know that you're putting your clients into the very best product that they possibly could be in, whether it's an IUL or an indexed annuity. We give more support with just about every step of the process, whether it's, hey, I met a woman that's got $500,000 whose husband just died and she's looking for income. What do you think I should talk to her about? How do I open up the conversation? All the way down to pushing your applications through suitability and fixing the problems that pop up. We offer more products, more strategies. We're contracted with 44 different annuity carriers, 30 plus life carriers. We do life settlements. All of these things help our advisors. And so the advisors that work with us usually make at least 25% more in the first year alone. Some double their income in the first year. And then they get to do it with 30% or more less time spent on admin work, case design, illustrations, scrubbing applications, calling the carrier. We do just about everything that we can for you, and we don't require anything from you. You don't have to sign up for us. You don't have to become a part of our revolution. Oops. And because of that, 95% of the agents that come to give us a try has stayed with us. If we go back and track the statistics since 1993, they either retire, die, or they get their securities license, or they go back to selling real estate or something like that. The tools we're about to show you, or Kent's about to show you, are a big part of how we do what we do, because it's the technology behind the experience and the tools and the training and the people. So with that, I'm going to turn it over to Kent and let him show you how awesome this stuff is. All right. I'm going to try anyway. There you go.
Here we go. This. Okay, I think we're good there, right, Dylan? Okay. Okay, welcome everybody. Today we're going to talk about how to take your FIA and IUL game plan to the next level. I'm going to spend about the next 30 minutes talking about everything I know about historical returns in fixed products and share with you all of that data so you can take your game plan to the next level. Guys, this is going to be an unbelievable webinar. You're going to be so glad you're here. We're going to show you how to manage that FIA and IUL book of business with less frustration. Guys, listen, I've done it. I've sold. It is frustrating sometimes to manage all of these different indexes, all these different clients, all these different reviews. And this is going to help you do that. And also, we're going to show you how to spend more time selling and less time preparing. That's huge. The more time you have, the more money you can make. And also find and close more sales. I know we have close more sales there highlighted because that's what everybody wants to do. But the key word in that one is find. We're going to show you how to find more sales and close more sales. So I'm going to walk through again and tell you everything I know about this stuff. And in the end, I'm going to show you some tools that will help you accomplish what I'm going to teach you today. So if that's okay with you, I want you to just type a yes in the chat right now. If that's all right with you, that I show you some tools, they're going to help you grow your business and go to that next level. Okay, here we go. So first of all, who am I? Who are you listening to today? Why did Greg have me on? Well, I'm going to be your coach today. I was licensed in 1995. By the way, that's the year the first index annuity was ever sold. So it was actually created in 1994. So we're really in the 30th anniversary right now. I also sold my first index annuity back in 1997. That's when I also started wholesaling index products, index annuities. I have held multiple positions at 7 different marketing organizations and actually own my own for almost 10 years. In 2004, I served on the committee that created the industry's first income rider, and I've been tracking fixed indexed historical performance now for over 20 years. So let's talk about a game plan for you. We call it the index cover 4, kind of going with our football theme here. So the index cover 4 starts out with set realistic expectations. Guys, you have to understand that your integrity means everything, everything. And if you're not setting your clients' expectations to be realistic, you're just setting yourself up for a fail. I know how it works. You know, we show these clients everything, we show them these rates of return, we show them all this stuff, get them all excited, and then the sale's made. And yeah, we see them every year, maybe if you go back and see them, but really it's going to be 5, 7, 10 years down the road before we're actually proven right or proven wrong. So what we say at the initial sales appointment is so important, and it has to be realistic because your integrity is everything. If you're talking about 10-year annualized returns that are over 20%, and guys, we've seen this all over the place in the illustrations, we've seen it in third-party software. These rates are unrealistic. They're inaccurate even. Yes, I just said that. They're not accurate. The way that backtesting is running and showing these numbers that we're seeing all over the place is not correct. You need to be showing numbers that are more realistic, and not just realistic, but right. Okay? The backtests that are out there, they're not correct. We're going to show you the correct way to do it. And that's going to build your integrity. Once you have access to this data and access to this knowledge, you are going to be unstoppable, and you are going to show the right numbers when everybody else is showing the wrong numbers, and that's going to build that integrity. So that's the first part of the cover 4. The second part is make informed allocations. Informed. We got to stop this whole thing about, oh, you know, the illustration says you're going to make 18 or 19%, but you can expect 5 to 7. Oh, really? Okay, that's good that you're saying that because, you know, in a way you're setting more realistic expectations, but why 5 to 7? Where did you come up with that? If you get somebody that really questions you on that, you're in trouble. You're in trouble. You need to learn how to set informed or make informed allocations. So when you're looking at a rate sheet and you're looking at all these rates and everything, how can you analyze it and get their clients to a point where they can understand what they're going to make? It's almost impossible if all you're seeing is cap rates and spread rates and par rates. You've got to know how to make those informed allocations and not just throw darts, guys. We got to stop the guessing. Please stop the guessing. It's honestly hurting the industry because we're just completely pulling stuff out of the sky. Oh, let's put some money here. Let's put some money there. Let's put some money there. Guys, there is a better way. You need to use data. How do you set informed allocations? You use data to back up what you're doing. Well, you might be saying, well, that's what I've been doing. I've got the illustration, I've got my report from this software and that software. But those, again, goes back to the first part. They're not accurate. Okay. You got to have the accurate information to show the right allocations and use data to back it up. That's the key. And that's going to prove your expertise in this industry. Because that's what you have to do. It's not about how much you know. When somebody says, oh, it's 17, 18%, but you can expect 5 to 7. Well, how do you know that? Well, you have to become like a lawyer. You ever been in a lawyer's office? When you walk into a lawyer's office, that lawyer doesn't have the law memorized. What do you see when you walk into a lawyer's office? You see bookshelves that looks like the exact same book over and over and over and over again. That's the law. What that lawyer wants you to know is, I know where to find your information. I am the expert because I know where that information is and I can access it quickly. And that's what you need to provide to your clients is that persona that you might not know how to analyze over 200 indices out there, but you know where to find the information quickly. And that proves your expertise. Third part, ensure positive reviews. Ensure positive reviews. You have to be able to walk into a review and have all your data ready. If changes in rates happen, rates go down, you got to have your explanations ready. And it can't be, oh, it's the economy. Oh, it's the market. Oh, it's inflation. Oh, it's the White House. That doesn't play. Okay. It might play with some people, but honestly, it's just making you sound like you really don't know what's going on. It's like this example. All right, we're gonna have 2 doctors here. You go see one doctor. You walk in, and the doctor says, I'm so sorry, you have cancer. People get cancer, it gets passed down from their family, or sometimes it's just poor lifestyle, or whatever circumstances you were exposed to something. So you got cancer. And there are treatment options out there. We'll look into them. Okay. That's doctor number 1. Let's look at doctor number 2. Doctor number 2 says, I'm sorry to tell you, you have cancer. It's in your prostate. It's right now between stage 1 and stage 2. What we're going to do is we're going to attack it with chemotherapy first. We're going to see how you react to that, see how is it working? And if that doesn't work, we're going to move on to radiation. And if we have to go to surgery, we'll go to surgery. Either way, you've got a very high probability of getting rid of this cancer just with chemotherapy. But again, we have other options if that doesn't work. So we're going to put you on a path that's going to get you cancer free. That's our goal. Okay. Doctor number 1, doctor number 2, nothing changed. You have cancer. But how did you feel with doctor number 1 compared to doctor number 2? Obviously, the more information you get, the better. We cannot control rates going down. We cannot control that. Just like you can't control getting cancer or not getting cancer. But it's how you express what you're going to do when rates go down and exactly why the rates go down. That means everything to your client. Also, You need to have new allocation strategies ready. If their annuity or IUL is not performing, then you need to be ready to make those moves. You got to be ready to pivot, and you got to have your plan ready. If you don't walk in to a review without a plan, all you're doing is walking in and saying, I just need to do damage control today. I might have to resell my product. I just got to make sure the clients are happy. Damage control is not part of a review. You shouldn't be thinking that. What you should be thinking is, I'm going to go in there and give data and give explanations, and the client, no matter what that statement says, is going to be happy. And finally, you might need to offer a new product. We've been hearing a lot about this whole fiduciary thing going around. Okay. And I know in the past, the industry kind of frowned on replacements. Don't replace, don't replace, don't replace. It's churning, all this kind of stuff. In my opinion, with these annuities, and not so much IUL, more annuities, if you're not looking at your old book of business, you're not being a fiduciary. Guys, things have changed. Things have changed in our industry since 2019 when Greg and I met. Back then we were tracking about 67 indices. Today it's over 200. In that it's about 5.5 years. We've went from 67 to over 200. And I got to tell you guys, we work with a lot of the Wall Street firms, a lot of these index providers that you're seeing in the products. We work with them. So a lot of them are our clients. And I got to tell you, there's more coming. This is the beginning. This is not the end. It's the beginning. We have new banks that are going to be jumping into our industry, new firms jumping in, new indexes. All the ones that are in now are creating new indexes, new strategies, new crediting methods, everything. Guys, your clients need access to all this new stuff because it's better. We are not just growing how much there is in this industry, we're evolving and we're getting stronger. And sometimes it makes sense to offer a new product to your clients. This is where that relationship's built. Guys, you got to walk into those reviews with the data, with a plan, with your answers, and that's what's going to solidify that relationship. And that's key. The fourth one, leverage new marketing. Guys, your biggest marketing is right there in your book of business. The question is, are you tapping into it? Really, the question is, how do your clients really feel about you? Are they just satisfied, or are they excited to be with you? Are they so excited that they want to tell their friends? Are they so excited they want to help you with marketing? That's the way it should be. You need to get referrals. And the way to get referrals is you got to treat people right. You got to make them excited about what you're doing. If things are bad during a review and you show them a plan and you make them happy and make them feel like you're really taking care of them, they're going to be excited about you. If you just come in and do damage control, they're not going to be excited. If you do other marketing, workshops, seminars, whatever you're doing, they can be a great source to bring people to your events. You have to leverage that. And then obviously upsales, they're there. On those reviews, you got a chance at more money. You got a chance at other products. So having those clients be loyal and happy with you is just paramount, because that's how you're going to really grow your business. So once you have all of this mastered, you're setting realistic expectations, you're making informed allocations, you're ensuring positive reviews, and you're leveraging your clients for new marketing. What happens? You get new clients. And then you take those clients through that same index cover 4 game plan. You have the integrity by showing realistic expectations of those new clients. Then you just take them all through, and it just keeps going and going and going. But the key is you got to have the right tools. So earlier, I told you that I'm going to talk about some tools at the end of this. A ton of you guys put yes in the chat. So here we go. Let me introduce you to Elizer. Elizer is actually our company name, and it's the name of our product suite. We have several Elizer products. I sometimes get made fun of because we have all these Elizers. I think even, our family, fantasy football league, somebody named their name Blitzalizer just to kind of make fun of me because we do everything Elizer. There's a whole bunch of them. Let's talk about it. So the challenge in setting realistic expectations. Okay, how are you supposed to do this when everything you're seeing is showing these crazy numbers? You know, and everybody thinks it's just happening recently. Oh, ever since they announced those volatility control and all these custom indexes, everything's just crazy and out of whack. No, it's been crazy and out of whack for 30 years. Okay. The softwares, the illustrations, yes, they've been out of whack for 30 years. And we're going to show you why. Retro pricing. Retro pricing is an invention that we have. It's a mathematical actuarial calculation that we came up with that is going to show you how index annuities and IULs really performed in the past. If you look at this, okay, the NAIC, we label that NAIC because they're the ones that have the models for the back testing that the carriers have to use in their illustrations. And most other third-party softwares, they follow the same guideline. Essentially, it's taking today's par rates and producing returns based on the last 10 years. That's how the NAIC does it. Here's how retro pricing does it. If you'll notice, okay, if we go back and forth, the returns got a lot lower. And you might be thinking, well, I don't want to show lower returns. Yes, you do. Okay. When Derek Ferguson created the first index annuity, he was not trying to compete with equities. He wanted to create the best fixed rate alternative in the industry. And he did it. And now it's been copied thousands of times. It's about being the best fixed rate alternative. It's not about beating equities. It's about beating MYGAs. It's about beating bonds, CDs. That's what these products do. And if you're showing equity-like returns, it can get a little unrealistic. It can get a little too good to be true. You got to show the right numbers. And that's what retro pricing does, is it calculates it differently. How does it work? Well, here we go. Right now, the NAIC model is taking a par rate from today and putting it up against the last 10 years. Well, listen, guys, here's why they're all wrong. Because a client will never live through that. A client's not going to buy an index annuity today and then hold on to it for 10 years and then have the carrier calculate their par rates and then go back and recalculate the interest and apply it for the 10-year period. It's not how it works. But that's how the NAIC model illustrates it. That's how the illustrations, the softwares, that's how they all do it. They take today's rates and they put it up against a time period in the past. But that's not accurate. That's not what people live through. What you need to know is what were the rates back at the beginning of the back test, and then apply it forward, do your sequence of return, and find out what people would have made if they bought this index annuity or this IUL 10 years ago. And I know what you're thinking. How in the world can you do that? You know, if an index was created in 2022 and I call the carrier and say, what were your par rates in 2014? They're going to think I'm crazy. Well, that's because we're not using the carriers. We have created, again, retro pricing is a mathematical calculation that pinpoints where those par rates were. Let me show you how we do it. So we have fixed rates today. The Treasury, when we made this presentation, was right around 4.07. What happens is that Treasury rate, when your client's money gets to the insurance company, they purchase fixed rates like Treasuries, and that's what guarantees your client's money, by the way. Now they take the interest and they create what's called an options budget. So it's how much interest in those fixed accounts creates the budget. Now, out of the budget, we have to take out things like the carrier's profit, their margin, how much they want to make. That's determined by the way, their AM Best rating. The higher the rating, the more margin they have to make. There's a little tidbit for you. Next, you have the annuity costs. Okay. When you're looking at a fact sheet on an index annuity, and you got things like, well, this product allows free withdrawals in the first year, this one doesn't. This product has MVA, this one doesn't. This has a terminal illness rider. Every one of those line items on that fact sheet have a cost. When the actuaries are designing the products, they're picking and choosing what's in those annuities. They all have a cost. So that's got to come out of the budget. Then the last thing is they use volatility to calculate how much the option is going to cost. The option, the stock option or the index option that backs the index. How much does it cost? When they buy that option, it has an upfront fee. So they calculate what that fee is based on 100% participation. Then they put that in the budget. Now we have budget left over. So if you've ever gotten the question of, well, how in the world can they pay me above 100% of what the index does? Right, here's the answer. They still have budget left over. They can buy more options and offer a higher par rate. That's what we have today in 2024. Now let's look at it 10 years ago. In 2014, treasury rates were down around 1.78, which means we had a much smaller options budget. Hey, carriers still got to make the same money. Cost of the annuity is the same. And then we use that volatility to calculate that 100% par. We're over budget. So now you see par rates out there that are below 100%. Well, this is why, because they're over budget. So they got to back it down to where they're in budget. So the question is, though, okay, that's fine. I understand that. We got to back it down. But how do we come up with that exact percentage? That's where retro pricing comes in. That's the calculation phenomenon that we've created, because we can literally pinpoint where those par rates were. So how do we set realistic expectations? Verify the accuracy within basis points. When we went and created this, we didn't just say trust us. We got it verified. I literally got on the phone and called every bank I could in New York and said, listen, I'm coming out there in 2 days. Can I sit down with you? Can you give me 30 minutes? I want to run a calculation method by you. And I got in to see 10 banks, and I flew to New York, and I ran around Manhattan like a crazy man, learned the subway system really well. And I sat down and I demonstrated our method for those banks. And then when I got home, I called all the rest of them and we did Zoom calls, and I showed them the method. And most of them said, most of them said we're right on, but a few of them said we're within a few basis points of being dead on accurate. So we know our calculation works. We've verified it. Now let's talk about allocations. What's the challenge with making informed allocations? How do I track and correctly allocate when there are over 200 indices and hundreds of products out there? I mean, guys, back when I sold my first one in 1997, it was the S&P 500. Do you want it with a monthly average and a 6% cap? Or do you want point to point with a 5% cap? Oh, and by the way, there's this fixed account. That's all you had to know. We live in a different world now, guys. We live in a better world. Yes, it's more difficult. Yes, there's so much you have to learn. But remember, the lawyer, it's not about you memorizing 200 indices and hundreds of products. It's about you showing your clients that you have access to a system, to data, that you can quickly analyze that. It's the bookshelves, it's the books. That's what you have to show your clients. And that's what Indexalizer is. Another one of our analyzers here. This is Indexalizer. This is going to show you. It's a simple web-based program. You go out there, plug in the client's information, select your carrier, select your product, and boom, you've got your information. You've got the realistic back tests. You know where the par rates were at the beginning. Now you can start to give informed allocations. Informed. In other words, backed up by data. Look at these numbers here, guys. Remember what I said earlier about most of you will say like, oh yeah, the illustration says this, but you can expect 5 to 7. Well, imagine if you could actually back that up with real data. Data that says, okay, if somebody would have bought this 10 years ago, here's what they made. That's what Indexalizer gives you. So the solution is make informed allocations specific to your clients in seconds. Guys, automatically, it's so easy. And you have access to it. Boom. You're going out tonight to write an app. You need allocations. Boom. Few seconds. You've got it. That's why we say we want to save you time in your preparation. You can get this information so quickly. And it also does diversifications for you. So there it is. You have all these different strategies and options to show your client. And then you just say pick. It's that easy. That allocation page on the app, honestly, I say it's the second most difficult page behind the suitability page. But now you just run the report. You just run the report. You print it out, put it in front of them, and say, choose. Here you go. And by the way, with most carriers, by using this method, by using data, which is your job, is just to supply the research, supply the information, let the client pick. Most carriers, that's actually a rule. So now you're giving them the data, they pick which one they like the best or feel most comfortable with. And now you set an informed allocation backed up by data. And what did we just do? We took the responsibility off your shoulders. It's not about what you said this would do. Where, guys, I know it. You have no idea. You're throwing darts. You have no idea what the next 10 years is going to look like. Well, all we can do is base it on the last 10 years and show them what really happened. Past performance is not indicative of future results. We all know that. But why does every other investment out there use that statement? Because it's only past performance they have to go on. Yeah, you can try to look into the future and Monte Carlo, the index is not, yeah, you can get into that if you want. But realistically, when I look at different time periods and I back test these things, what I usually see is the pecking order of the allocations doesn't change. The numbers will change a little bit, but it's that pecking order. So now you know which ones to go into, where to put your clients. Okay. One of our agents said it's very powerful for the client to see the allocation section of the report. It is a tool all agents should utilize in their selling process. I couldn't agree more with Sheila on this. Guys, your clients need to know. They need to know what people would have actually experienced before they buy this. And that's what's going to set that integrity for you by showing them the right numbers. Yeah, I'm telling you to show lower numbers. Yes, because the numbers are so ridiculously high right now. You're actually going to look like a professional when everybody else is going to look like a used car salesman. Okay, let's talk about the challenge with these reviews. No matter what your client's annual statement says, you should never have a negative review. And that's where Reviewalizer comes into play. Reviewalizer can take a statement like this, a statement that's showing very poor returns and a lot of rate drops, and make it okay. You're going to you're going to click in and you're going to launch Reviewalizer. You're going to simply add in all the methods right from the statement, add in their different options, put in their surrender value, and it's going to create an amazing report for you, a reallocation report that says, okay, here's our different options. So it literally would take your client's annuity, everything's based off renewal rates, and show them exactly other options that they can go into. So if you're walking into a very low performance year, or even a zero, now you're walking in with a plan. It's just like, I'm sorry you have cancer. Or, yes, you have cancer, but here's what we're going to do about it. Then when those rates drop, instead of, oh, it's inflation, it's the economy, it's the markets, it's the White House, all these answers that are just completely too broad, it makes it totally look like you're dodging the question. You get a report that says, okay, this S&P, it went down. Why did it go down? Well, bonds went from 151 to 119. That could cause your rate to decline. Treasuries went from 4.28 to 3.67. That could cause your rate to decline because we're shrinking that options budget down. And now let's talk about volatility. If volatility goes up, that could cause your rate to decline because here's why. Volatility last year on this index was 10.70. This year it's 14.62. That's a huge jump in volatility. What that means is more people are buying and selling that option or that index. In Economics 101, if a store has a hot product and everybody's buying it, they can raise the price and still sell it. That's exactly what volatility tracks. How much activity is going on in that index? Okay. The more activity, the more people are buying and selling, they can raise the price up. It's a very desirable index. When that happens, when that price goes up, the insurance company, okay, they got to stay within that budget. They got to lower their par rates down, or their cap rates, or their spread, or raise their spreads, because now it costs them more to have that index in the product. Then you can offer a new annuity. Guys, this is where it gets really fun. So you've got the annuity, you check it out, make sure that they can, it's suitable to make a move, and then you can run the numbers. You can plug in whatever, you can just select whatever annuity you want, allocate it, and it creates this report. So you can basically look at it and say, all right, well, you're tracking into 3.19. So what it does, it converts their allocation into a 10-year historical. So we can compare that to other 10-year historicals. So you're tracking it at 3.19. We can do a little bit of paperwork, get you out of that red line up to the blue line, and get you up to a 4.67. Okay. So that increases your probability of making money. Or we could do a little more paperwork and get you up to that green line, 7.35. It raises your chance of making money. And this is a very awesome report, spelled out, really easy for your clients to understand. You got your reallocation report. You got your explanations on why rates go down. And now you can literally show the numbers between their current product and a new product. And I want to mention too, we have a feature in this that's called a drawdown. You can see it there. It says new product drawdown includes 60%. We show a drawdown, guys, because when we're looking at renewal rates, okay, these are rates that have probably been chopped down, chopped down, chopped down for years. We can't just throw first year rates at it and say we're comparing apples to apples. That's not fair. So we throw that drawdown in there. So again, we're looking at the same 10-year time frame. So in that 10 years, their current product has been dropping, dropping, dropping. So we got to show our new product with rate declines. So we can simulate those rate declines with our drawdown feature. So now we're as close to apples as we can be. And that's what these reports will show. Have everything you need to walk into your review with confidence. And if possible, you could close a new sale. Your mindset's going to change from my reviews used to mean damage control. Now they mean sales opportunity. That's what you want. Paul said, Reviewlizer didn't just save my case, it helped me keep my largest AUM client. I'll never forget that phone call, guys. He called me up almost in tears, just thanking me for creating this system, because he was walking into a client that hadn't made any money in their index annuity in 4 years. And he went in with a plan and they reallocated, and the client was happy. The client respected the agent, didn't move his money away. That's how powerful this is. So if we look at how to supercharge your playbook to set realistic expectations, that's what retro pricing does. Our phenomenal actuarial calculation that shows us where those par rates, cap rates, spread rates, where they were 10 years ago, so we can give accurate 10-year back tests. Make informed allocations. Indexlizer does that tremendously. Gives you so many options and shows you exactly, and you can actually do custom allocations in there. And then ensure those positive Reviewlizer is going to make every review appointment positive. And then leverage your new marketing. Our entire Elizer suite of programs will do that. Will help you get your clients so excited about you that they can't stop talking about you. Elizer truly is a no-brainer. You get a 30-day free trial, guys. So you can sign up for this, kick the tires on it for 30 days and see if you like it or not. And there's no contracts. You're not signing up for 12 months or 3 months or 6 months. There's no contracts. All right. I believe in what I've built, and I believe it. I know it's going to help you make money. The normal price for the Elizer suite of programs is $99 a month, guys. But with Greg, one of my oldest and best relationships I have, you can get it for 25 bucks a month. Honestly, if you go out to indexlizer.com right now and sign up, it's going to be $99 a month. But if you go where we're going to show you here in a second, and actually we're going to put that link right in the chat right now, there it is. You can click on that and sign up right now, and it'll be $25 a month. But there's more. Now I feel like we're in an infomercial. Now, if you sign up today, all that kind of stuff. Let me talk about our Eliza Elite program. This is a new program that we launched within the last month, and it's just going to really, if everything I've shown you is going to take you to the next level, we're going to the next level after that. What you get with Eliza Elite is you get a 30-minute one-on-one call with me. You can ask me whatever you want. I just did one of these the other day, and the agent, he wanted to talk more philosophy than how to use our systems. Okay. And he got some great tidbits from me on how to close more sales. You also get invited to our monthly Power Pack webinar. The one actually tomorrow is the one for September. So tomorrow we're going to dive deep into our softwares, show you some pro tips on how to use the printouts, how to use the outputs. And then also we always bring on a guest speaker. Tomorrow we actually have Mary Laura Shondamont from Barclays is going to talk a little bit about their indexes and then some educational topics. So you'll actually hear right from the source. Every month we have a new person on. Next month, we're going to have Goldman Sachs on. So you can be invited to these Power Pack webinars. And then you get an exclusive presentation on how to explain volatility. Guys, right now, the VIX is on its way back up. It's at 20.81 right now. What that means is if you're in the S&P heavy with your clients right now, because it looks so great, because it is great. It's on sale right now. You're seeing these high par rates, these high cap rates. Sometimes you might even see like a 50% par on the S&P. Well, guys, when the VIX starts to run, that 50 could turn into 15 the very next year. So you got to be ready to pivot. And where you're going to pivot is to a vol control index. And to explain that to a client, this presentation does it better than anything I've ever seen. And you get that. We have presentations for you just signing up for Eliza, but this is a special one just for our Eliza Elite. The cost for this program is $120 a year on top of the $25 a month. But because you're on this webinar, you get it for free. You get it for free. If you sign up before we're all done here, go out and register, then you get automatically included. You don't need to check it when you're registered. You don't need to check Eliza Elite or go out and sign up for it. You will automatically be put into our Eliza Elite program. So, guys, we have had a lot of information thrown at you today. Okay, the big takeaways are everywhere else that you're getting back tested information is not accurate. Our retro pricing is accurate. It's showing what really happened. So you can set those expectations better. And that's going to funnel in to making more informed, better allocations, which is going to funnel into never having a bad review, which funnels into very happy clients that refer you and help you with marketing. And then it all starts all over again. That's what you need to take away from this. So what I'm going to do now is go into a little Q&A. So if you want to ask some questions, please use the chat. So, okay, do we have training? Okay, I'm actually going to jump out of this presentation real quick, and we're going to go into the software. I'm going to show you in the dashboard. Yes, every single one of our programs. I'm going to go into Indexalizer. We have a training link on every program, and you can go in and watch the video, and it just is me walking you through exactly how to use every single one of our programs. So yes, there is training on every program. Any other questions? Some of the questions that I've been asked in the past. Oh, wait, we got one here. Guys, okay, no, it's not a question. It's the link. Okay. So one of the questions we get asked a lot is that $25 a month. Is that locked in? It's not locked in, but guys, in 6 years, we've never raised it. We've raised our prices to our agents that don't go through our FMO partnerships like Greg, but we've never raised the $25. No. In almost 6 years now, we've never raised it. We do not have any plans to raise it. How are we going to beat inflation? We need to put this in front of more agents. That's how we're going to do it. We don't ever want to raise prices. Another thing too, we talked about how, okay, we got another question here. Will you be sending a copy of the Zoom meeting today? That's a question for Greg. If he wants to send it out, he can. Some of the other questions on the retro pricing, I always get asked, how do you know that it's right? Well, I know because we're using mathematics. And I've sat down with the top minds in our industry and validated it with them. That's how I know. That's one of the best questions I could ask. And I love the answer I have for it because it's true. And another thing, kind of a spinoff from that, is how do we show the illustration and retro pricing? Well, they can work together, guys. The illustration, instead of focusing on the growth and the returns that it shows, focus on the new par rates. Think about it. If I'm going to set somebody up, set their expectations, what I'm going to do is I'm going to show MIGA rates. That's what I'm going to show. And all we got to do is beat the MIGA rates. Then I'm going to show them retro pricing. Hey, that beat the MIGA rate. Then I'm going to show the illustration and show where rates are today. And it's the best time in the world to buy an index annuity right now. Rates are as high as it can be. So I saw some other questions come through here. Let me see if I can pull this up here. Let's see. How does Indexalizer help with IULs? Well, inside of Reviewalizer, I'll launch Reviewalizer real quick. You can actually put in an IUL. It has the additional boxes there that are specific to IULs. So you can use that for IULs. We have more for annuity than we do IUL, but this is probably the biggest one. And then Greg and his team can also give you some allocation reports for IULs. So guys, what I mean by that is in the dashboard here, you have access to Indexalizer, Reviewalizer, Chartalizer, Comparalizer, and we always show you what we're working on with Calculizer and Diversilizer, which are going to be amazing products when we get them finished. But you also have this FMO catalog that you can click in, and you can order any customized report, including IUL reports from Greg, and he can put those together for you. So you can help on new sale allocations for IULs. Okay, do you take into account tax implications related to your clients and the returns on investments? No, we are not a financial planning software. We are strictly looking at the performance of the indexes and the performance of the strategies. Okay, so there's no tax information that's up to you or whatever tax consultant you have in your practice or whoever you refer to. Okay, let's see. The $25 covers all the parts. Yes, you get every one of these for 25 bucks, guys. And then the new ones and anything else that we develop in the future, you get that as well. And you also get access to our resource section. All right. So let's say, I'll give you an example here. You sell an F&G product and you put a client in CIBC's balance asset 10. Okay. And you don't really explain who CIBC is. You just choose it because it's a good allocation. What if you're selling to this ultra conservative person that just has like a hatred for Canada? Did you know that CIBC is a Canadian company? Well, you would have known if you went into our library and go into our index provider information, and you can click on CIBC and you can see every index that they track, what carriers are using them, and you click here and you go right to the About Us section of CIBC. Guys, you need to make sure that your clients know everything about the indexes you're selling. And all that information right here. Right here is your bookshelves. This is where you have access to everything that you need. You want to explain an actual index? Go into the index fact sheets. They're all here. Look at this. What is the Goldman Sachs Zenith? What's inside of it? What's its target volatility? It's all a click away, guys. You have access to everything in the industry that has to do with index annuities and IULs. And there's so much more. You've got the marketing. There's different marketing systems you can check out. Presentations. Remember I said we have that special volatility one? Well, we have others for our normal members as well. If you want to explain the risk versus reward spectrum, you can watch a video that shows me running through the presentation, and you can launch the presentation right in your office or in the client's home and just click the arrow and go right through it. Talks about how, with no risk, what is the best? It's the FIA. And it walks through how when you're younger, you can, work in that area, but when you get older, it's time to look at FIAs. So you have all these different presentations that you can do. And then we've got technology, and then we show you what we're adding, coming up soon that we're adding to the resource section. So guys, there's just a ton of information out there for you. Okay, any more questions, guys? Let me look at the chat here. The right-hand column in the index shows rates return. Are these net returns after factoring the par rate and the fee? Yes. Everything is baked into that return. The fee, the par rate. Now, what we don't bake in is like additional stuff that you could add. Like if there's an extra fee for an income rider, that's not baked in there. But if there's a fee in there that's just buying up a par rate, yes, that is baked in there. Mentioned that Greg put the link in the chat again. We had issues. Okay. So we got the link out there now. Yep. So the link's out there now, guys. Just click on it. And where you're going to go when you click on that link is it's going to take you into TWH's landing page on our site. It's going to bring you right in here to the agent sign up, and you just fill out your information and you're good to go. So that's just go in there, put in your name, and then you're gonna pick your username and your password, and then boom, put in your card information, and you're good to go. You got the 30-day free trial, so you can kick it around. And again, no contract. Okay, let's see if we have another question. Did the registration link? Okay, there we go. Okay, there. Looks like we got it going. So, guys, some other questions that we've had in the past that I think are very, very important, okay, is how often is the data updated? Okay, that's crucial. Every single day we update the indexes. So if you go into Indexalizer and you run a report today and you go in and run that same report tomorrow, your numbers are going to be a little bit different because we literally update all the index prices every day. And then as carriers change their rates, they're instantly updated into each system. So that's a huge thing to understand about what we're doing is we're giving you current up to date. All right, you've got all the different, highest, lowest, best, worst, all that on the illustration. We want to give you the most current data. Okay, any other questions, guys? Okay, mention that their Ledger Elite access will automatically be available later today and they will get an email. Yes. So yes, you're going to get an email when you sign up today for Eliza. You get your Eliza Elite welcome email, and then you will instantly get for tomorrow's webinar, so you can be on there with Mary Laura. You'll get that link so you can join us, and then there'll be another link that you can hit that you can set up your 30-minute call with me, and then where you can download that presentation on volatility. And guys, that you need to understand that is so crucial. Okay, because this S&P 500 wave is gonna hit the shore. Okay, you need to be ready to pivot your clients' money. Okay, so that is a powerful presentation, and it really explains at a client level how the whole thing works. And it's a great diversification tool then, because it leads you into understanding what these volatility control targets are. This one has a 5% target. This one has a 12.5% target. Well, you need to understand that the higher the vol target, the bigger movement you're going to get in the index. Okay. The lower the target, the smaller movement. So should you go smaller movement? And also what happens with that low vol, then your par rates are going to be higher, your cap rates or your spread rates are going to be lower. So you're going to have better rates with lower index movement, or you could have a higher target, get better index movement and lower rates. Which one's better? Don't know. Don't know what's going to happen over the next 10 years. That's why you have to diversify. So using vol targets to diversify, that is going to make you look amazing in front of your clients. They're going to really feel like they're with a professional. It's kind of like when you're at the doctor's office and they start throwing out all those Latin terms. You're like, I don't know what he's saying, but I'm glad he knows, or I'm glad she knows. That's how you're going to sound when you start diversifying and talking and using the lingo. And if you need to learn the lingo, in the resources section in the library, we're building a very powerful terminology glossary where you can go in. You need to know, what is Sharpe ratio? There it is. What is market hedge? There you go. So when you're reading those fact sheets on the indexes and you come across terms you've never heard of or don't really understand, you can go into the glossary, and more than likely it's going to be there. We're adding to this all the time. Okay, any other questions, guys? I want to keep going with the questions so we give people time to sign up. And again, get signed up now, get in our Eliza Elite. Again, it's you get that 30-day free trial, no contract, and it's only 25 bucks a month. Let me talk about that for a second. 25 bucks a month. That's only $300 a year. So if you dive into your book and use Reviewalyzer, is it going to find you one case, just one case in the next 12 months of only 15,000 in premium? Will it find you one case? Because 15,000 in premium at a 6% commission is 900 bucks. That's tripling your investment, and then you get everything else. And I'm going to tell you right now, Reviewalyzer will find you a case that you wouldn't have had in the next 12 months. It's probably going to find you several. And when you're working with new clients, when you're doing your marketing, you're meeting these people, as well as I do, they have index annuities. Guys, there's billions of dollars out there in orphaned accounts. How do you unlock those and turn those into sales? Reviewalyzer. Reviewalyzer will give you the numbers you need to convert that business. And again, all you got to do is have it find you one case for 15,000. You've tripled your investment in the system. Okay, how long after sign up to get the confirmation? You're instantly in. As soon as you sign up, you can go right in and start clicking and going through the programs. Asking for a valid account username on application. Dylan, do you know what that might mean? Um, yeah, Ray, it might be because you already have Indexalizer. So maybe you're paused or you've canceled in the past and we already have your information. If that's the case, let's do this. Dylan, put your email address in. You can't? Okay. Well, what you need to do, guys, is go out and email Dylan, Dylan, at Index Resource C as in cat, T as in Tom, R as in retro.com. So Dylan, Dylan, at indexresourcectr.com. If you're getting that like Ray is, if you've already had a subscription and it's not letting you get a new one, send Dylan an email and we'll go in and get it moved under TWH and get you back going again. Okay, guys, any other questions out there? One more question from the past that we've got. We had a person ask, can I use this? Is it client facing? Is it approved for clients? No, there's no third party software ever that's approved for client to use. So what that means is, rule of thumb, guys, you can show it, just don't leave it. Keep it in your binder. You can show it, just don't leave it. Will we have access to all the Eliza portions? I see 4 to launch. Yes, so there's 4 programs. The other 2 are coming soon, that we're building that. So we always put out there what we're working on, guys. So you have all 4 of those, and then you got your FMO catalog right here. And then you've also got your MIGA report, and then Journey Guide, something we can do, we'll talk about later. You can get a discount on Journey Guide. It's a financial planning software, which is actually awesome. And then you have your resources. So you get all of that for the 25 bucks a month. Okay, guys. Any more questions? And if you think of something after the fact, just get a hold of Greg and he can, probably answer almost everything because he's been with us for so long. And if there's something he doesn't know, he'll let us know and we'll get you your answer quick. Guys, the bottom line is clients need to see what these index annuities and IULs have really done. We can't show these numbers from this other back testing anymore. The integrity of our industry is at stake here. Why are we being attacked so much? Well, it's because we're showing the wrong numbers. And most of you guys are probably of the school thinking, oh, these new custom indexes, I don't like them. They're once they went live, they were terrible. The back tests are crazy. Well, that's because the back tests were crazy. Yeah, if I'm looking at an index and it's showing me a 22% annual compound historical return, and then I look at it live and it's showing zeros, I'm gonna think something's wrong as well. But you have to understand what happened. And that's where Chartalizer comes in, guys. If I go in here and I pull up like let's well, we talked about CIBC. Let's look at the balance asset 10. If I look at this chart, it shows exactly what happened. Yeah, this index was launched right around 2022, 2021, 2022. Okay. There's probably more like 2020, 2021. It was launched, and then right afterwards, it just dropped. So did a lot of indexes. Why is that? Well, bond rates had a lot to do with it, but the biggest thing was look at the run that it had prior to 2020. It's one of the biggest bull markets in the history of markets. And really, if you understand what an index is, it's a grouping together of assets, underlying assets. And if an index is moving like this, those underlying assets are just growing like crazy. And all the big money managers on Wall Street, they got to a point where they're like, let's take some profits. I mean, this is about as high as it's going to go. And they knew that whoever started this whole thing, because that's how markets go down, is when somebody starts selling off, then everybody starts selling off because they want to get a good price and bank some profits. That's what happened. And it dropped. And now we're seeing stability. And now we're seeing the start of maybe a new bull market because now they're all buying back in because they're seeing a good buying opportunity. That's what happened, guys. That's what happened. So I wanted to point out too that when you're in the dashboard, we got these little tags up here. So Indexalizer is good for point of sale. Reviewalizer, obviously for reviews. Chartalizer is good for marketing, pre-sale pieces, and review. Review, yeah. When you walk in and that client has got a 0 on the index, you can show the chart and show them why it happened. Again, you can't change it, but you can give them the reason, and they know you're on top of it, and you have access to the programs that will help explain it. Comparalizer down here, great for marketing and pre-sale. Comparalizer is an awesome program to compare index annuities with MYGAs, bonds, and CDs. So you got those clients that just love CDs, that's your tool right there. Unlock that case. So Chartalizer, again, for marketing and pre-sale, if we go back to it real quick here, we display that chart. You get the actual chart, but you also get this chart. This is one that I get compliments on all the time. That Indexalizer average, that black line, that's the average of all 200 plus indexes that we track on a daily basis. That's their average movement. So now you get to see each index up against the average. So is this a above average index? Is it a below average index? And when you're going up against, a competitor's product, check the charts on them. You find one that's really below it, you can use that to blow away your competition. And we also show how the index does against equities and bonds by using the S&P 5, which is obviously the number one benchmark in most money managers platform, and then the Bloomberg US Ag. So it's a very, very powerful, powerful tool that you can use as an extra added benefit. So are most of the reports in the FMO catalog. Spend some time in there because you can actually click on them and see exactly what the reports are, how you would use them, and how to call Greg and order it from. Like this is this 1 year, 2 year laddering where you're going to split the money between a 1 year and a 2 year design. And at the end of the first year, you're going to move that 1 year into a new 2 year. So you're staggering your 2 year resets. So you can be in the 2 year resets and avoid those automatic guaranteed 0 years. And you can actually click on it and actually see what the report looks like. And this is something you can order from Greg. Why are we doing this? Why don't we just give you access to this automatically? Well, the reason is, guys, I want you to be successful. I want you to be successful. If you're going to sit in your office and analyze and analyze and analyze, that means you're not on the phone. That means you're not talking to clients. That means you're not marketing. Everybody wins when you're selling, and you should be selling or preparing to get people to sell to. That should be your whole day. Let Greg and his team do the big analysis. You got a client, you need to know what product, call Greg. He'll run it. He'll run it. And then when you're ready to go and actually have the appointment and take the app, then you go into Indexalizer and get your information. That's why we don't give you access to the big full blown. Greatest point. Thank you, John. Thank you. I've done this. I've worked at the FMO level. I've worked as an agent. And my problem at the FMO level, why I'm not doing that anymore, is because I spent all my time building these programs and not enough time on the phone trying to talk to people like you. Okay, my father-in-law was the same way. He's been retired for years. He was a CFP, And back then it wasn't software programs and websites, it was magazine and newspaper subscriptions. And that guy had a ton of them. And he sat in his office and he researched and he learned and he learned and he learned. It was like, well, what good is all that knowledge if you don't go out and share it to a bunch of people? He was successful. He had a great career. So I still haven't met somebody that knows more about the whole financial landscape than him. But if you're not sharing it with people, what's the point? What's the point? He could have been way more successful if he would have relied on his FMO and with him as BD to feed him that information right when he needed it. And he spent all his time out marketing. If you want to be successful in this business, you need to be marketing and selling, period. And we try to lower down that prep time by giving you these tools. But again, there's more out there that Greg and his team can help you with. Okay, guys, any other questions? Hopefully you've all signed up. Again, it's a no-brainer, guys. You got the 30-day free trial, no contract. If you don't like it, you can leave. But I know you're going to like it. Because I know Reviewalizer is going to find you way more than $300 a year. Way more. Okay, well, I think I'm done with my section of the presentation. Greg, if you want to come back in and kind of close us out. I'll go ahead and stop my share. There we go.
Thanks, Kent. I will say that I do a couple million a year in annuity sales just from it. Clients I've inherited from agents who have died or they moved so far away they let their license go, that kind of stuff. So I get to stay in the game. And when I started using Indexalizer, Reviewalizer, and that journey guide software that Kent mentioned, the meetings got so much more robust, quicker, and the clients started buying in faster and having confidence because now it's not just me as a salesman sitting in their kitchen telling them things. I can actually show them that this is the historical data of the index and this is what and let me show you the par rates. And one thing that Kent, I think, just briefly touched on was beating out other client or other agents who have made a presentation with an illustration that is showing, 22% back tested. And you walk in and say, well, yeah, can I see that? And they pull out the illustration. You go, well, let me show you the real numbers that you've done. And then you can do the research and find something where the real numbers, because I'll use an exact example and I'll try hard not to use any company names or products. But the illustration that the client had been given by some other advisor was showing about a 19 to 20% average back-tested 10-year return. When I was able to look at that then and go do the real numbers using the Indexalizer systems, the Elizer systems, I was able to go back and go, well, here's what that really would have done if it was bought 10 years ago with the par rates and the bond option rates back then. And it was like 2.5% per year.
Oh,
and
yeah.
the other option that I showed them was more like a 6.5% per year. And they were blown away. And then they were really mad that this other person was trying to dupe them. And I'm not going to beat up the other advisor. He brought a carrier illustration into this client's house and showed them what the carriers told them was kosher. It's just not accurate. We can't stress this several times. You don't want to pitch something that is not going to happen or get anywhere even close to that. 4 or 5 years into an annuity and the 18% average isn't anywhere near that. So setting realistic expectations is really, really helpful.
Hey,
Now,
Greg, can I jump in real quick?
Sure.
So a couple things on that, because that's so true. Showing those big numbers is not going to win you cases like you think it will. Yeah, you might get a lot of apps signed, but then you're just setting yourself up for headaches in the future. You really are. And you have to be really, really careful because a lot of carriers now, what they're doing to try to fix this problem is they're not even asking you how you want it allocated anymore. They're just mandating that their people in there running the illustrations just set it to really low performing indexes. I've seen this. So now they're not showing the big numbers, but they're still not allocated. And what they're doing is just forgetting about all these new great indexes. So you got to be really careful with those illustrations. And if you get sent an illustration like that, that doesn't mean you should allocate that way. Okay, they're just doing that so they don't have these crazy numbers, because you have to understand something, that is not the carriers. Okay, the carriers have to put those back test numbers in their illustrations. They're mandated by the NAIC. So it's not the carriers choosing to do this. But you still need to show those illustrations, guys, because that's where that guarantee page is. And you need to show that guarantee page to your clients. So, like I said before, don't set an expectation of a number. Don't put a number out there for them. Show them the best MIGA rate. If you're selling a 10-year, show them where 10-year MIGAs are now. And that's what you're trying to beat. And then show with retro pricing how the past would have beat it, the real past, and then use that illustration to show that guarantee page, and then show where rates are today. My gosh, those illustrations can make more sales for you that way than showing the false numbers. Just show the par rates. Say, man, we beat that MIGA with this really low par rate from 10 years ago. Look where they are today. Right now is the time to buy. It can be a great just buy now tool that you can use. But just be careful and make sure those illustrations are showing the proper allocations, okay? Because I've seen that from several carriers now. They're starting to do that.
All right, I'm going to stop. There's too much, kid, because every time you bring something up, it makes me think of another sale. Thank you so much for taking the time to help us with this. I'll share from my own experience that the indexalizer might look a little bit hard to understand, but after 10 or 15 minutes of just getting in there and clicking around and trying it, it all becomes pretty intuitive. And if you have questions, call us, because I've been playing with it for several years now. There's nothing more powerful. Hey, I'm going to throw out that Kent has also graciously offered to be a keynote speaker at our third annual annuity summit that we're doing October 9th through 11th at the Talking Stick Resort in Scottsdale, Arizona. We've had such great success doing this the last 2 years in a row, with advisors coming to check us out, see what we have to offer. And they learned so many new ways to grow their business that, they've stayed with us, and they've really transformed the way they do business. And part of it is using tools like this and having access to experts like Kent and what we can show you how to use the technology. With that, next steps here, guys. I was going to say type index into the Zoom chat and we'd get you signed up with the Indexalizer suite, but the link has already taken care of that. For those of you who may not have gotten the link, because I did see something in the chat about that, we'll send out a follow-up email with a recorded link to this webinar and with links for the signups. If you're interested in finding out more about our Arizona Annuity Summit, that's October 9th, type AZ into the chat window right now, and we'll reach out to you and talk, and we can tell you some more about it and see if that sounds like it might be something that would help you. If you're selling index annuities and even some IULs, I can almost guarantee that you'll get enough out of it that it will help you grow your business. By the way, we cover everything except your transportation to get to that summit. So registering with us, I get this question quite often, is how do we sign up with TWH? We don't have contracts, guys. You don't have to move 3 of your carrier contracts or anything like that. But we do ask that you just get into the SureLC link and click a connection with us. It doesn't tie you to us. It just makes us able to get you contracted with carriers if we get a case going and decide it's time to get you contracted or move a contract. So if you scan the QR code on the screen, that will take you directly to our SureLC system. You're probably already in there, and it would just be opening up access to say, yes, I want TWH to be an FMO that could help me do more business. And we'll put that stuff in the follow-up email as well. With that, I'll leave our phone number and our email address up on the screen for those of you who want to jot that down and reach out to us directly. Kent, Dylan, Garrett, if you're there, thank you guys so much. Your tools have truly helped us become better at servicing our advisors, and that's our daily goal. So thanks, guys. Everybody take care, and we'll talk to you soon.